He's Keith Neumeyer, founder and CEO of First Majestic Silver. Keith, welcome back to Kitco.
Well, great. It's my pleasure on such a wonderful day.
It feels like a whole 2 years since you last talked to Kitco at the end of March. Silver is having a moment, having broken decisively through $20 an ounce. Keith, tell us about this rally.
Well, look, I'm watching it over the last couple of days, and I have to pinch myself just to make sure I'm actually awake, because I've been a bull on silver for 18 years, and these rallies I've predicted many times, and the last 5 or 6 years have been pretty tough, and it's just really nice to see that finally we're getting some attention, and it's great for shareholders in the space as well.
Now, there's a lot happening, and there's obviously the production fall off due to COVID-19 suspensions. There's the industrial demand because we see things really heating up in the green tech space, and then obviously the precious metal interest. Can you talk about what you see in the demand picture? We'll get to the supply picture in a minute, but what are some of the major factors right now in this rally?
Well, you touched it. Demand is growing every year, and we know that there's a pretty solid 4 to 6% increase in demand going back over a decade, and supply has been dwindling away, and then this deficit that's been building, and it's of course some people dispute the numbers, but we're members of the Silver Institute, and I've been quite critical of how a lot of this data gets accumulated in the space, and quite honestly, it's all made up. There's really no good data out there. We know what the miners produce pretty well. We don't know what all the miners produce, but at least there's some guessing going on. But the publicly traded ones we could count. But when it comes to the demand side, the big demand or the big consumers of the metal, silver, don't want to talk about what they consume, and actually they're paranoid to let you know exactly what they consume, because they're afraid that you and I and every hedge fund on the planet is going to front run them and drive the price of the metal to highs where it should actually be trading at. So there's a very secret network of players in the space that just don't allow this information to come out. Being in the silver space, running a First Majestic for 18 years, I know the tightness of the market. I talk to traders, I talk to the industry. I know the demands in the sector, and I know how tight the supplies are. But it's only going to get worse as we go green as a human race.
What are the major factors on the industrial side?
Well, we're getting off oil and gas. That's quite clear. And this ball started to roll a few years ago. When I put this company together, we didn't have solar panels to any great degree. We didn't have electric cars to any great degree. Now solar panels are the largest consumer of silver in the space, and consuming over 10% of the world's supply of metal, one industry, which didn't exist 20 years ago. The electric car industry as well. The electric car, as far as we can tell, and of course these numbers are held pretty close to the chest of all the auto manufacturers, because they don't want you to know the numbers. But based on our analysis, we feel that there's about 3 times more silver being used in an electric car versus a fuel combustion car. Huge demands on metal. Of course, we're all wanting computers and all the gadgets that we use on a daily basis. Even to pull this call off, requires a ton of silver. So there's a lot of drivers on the demand side, and for us to electrify this planet as we want to electrify it and change the way we do things for humanity, we're going to need a lot more silver, and the prices need to go much, much higher for us to supply the demand that's required.
That's on the demand side. Let's switch to the supply side. Obviously, Latin America being one of the major producing regions for silver, also one of the regions that was hard hit by COVID-19 and some very strict suspensions that were put down in that region. When you last talked to Daniela and Kitco at the end of March, you were starting to tabulate what the production picture looked like as these suspensions were being introduced. We now have the Q2s that are starting to trickle out. We did have the notice, for instance, about Pan America that is going to be suspending some mines down in Peru. What is the supply picture looking like right now? Do we have more clarity on it?
Well, if you just look at the data that's been available for all of us, you publish it yourself on an annual basis. The data comes out, usually in the April-May timeframe every single year. It is quite delayed. and it's shown quite clearly that the supply of silver has been dropping almost yearly for the last 4 years. And consumption's gone up, and we know that. So with the COVID situation, it's even got worse because, at one point in May, we had 50% of the world's supply of silver offline. And that's a pretty big number. If you're, one of the major electronic manufacturers, you're not going to stop buying your metal for the production of your televisions or your computers or an automobile manufacturer, not just going to stop buying their critical components to produce what they need to produce. So the supply or the consumption side remained in place while the supply side obviously fell away. We felt it on the retail side. Our premiums on our retail products went up dramatically, as probably yours did as well. I know yours did as well. We started running out of our retail inventories quite quickly in March and April when the demand spiked. And at one point there, we were selling silver for $5 above spot. And I know that other companies like yourself and other retailers out there were also in the same situation because the inventories were just getting so low. We're even having a hard time now replenishing our retail inventories because, the refineries and the smelters have a lot of pressure on them to push the metal into industry where they have long-term contracts.
Let's talk about First Majestic. You had the quarter that you released recently. Operations down in Mexico. Production was crimped. What's it look like going forward?
Well, Q2 was a difficult quarter. Obviously, the production was. I don't have the numbers in front of me, but somewhere around half of what was anticipated without COVID situation. And everyone knew that, and it wasn't just us; it was the entire sector, as I just pointed out about the silver supply being cut by 50%. That's worldwide, and of course we were affected by that. Q3, we're back up and running. We had a bit of a slow start in the first week of July, just getting people back to work. There's still a group of people in Mexico that aren't allowed to come to work. There's a vulnerable group that is made up of individuals that are obese or have diabetes or other health issues, or maybe they're just over the age of 60, and the government has put them in a category. So we're continually have those individuals on our payroll. About 10% of our workforce is in that category. So we haven't been able to get all our workers back to site. We are hiring some part-time temporary workers to fill in the gaps to take care of some of the key positions that some of the vulnerable people may have been holding previously, and we'll see how all that works out. But things are looking pretty good. The production's picking up. We expect to end Q3 with a pretty strong quarter. I don't know exactly; it's too early to say what the quarter is going to look like. But by Q4, I think we'll be back up and running, and we're trying to make up the ounces we lost. Whether we can do that across the board is hard to say. It's a big challenge making up those kinds of ounces, but we're working our best to end the year on a strong note.
Keith, I was trying to remember, did you release guidance for the year yet or no?
We did. We put guidance out just a couple weeks ago, and cost guidance came down, which is nice to see. So our costs have dropped from our previous guidance. Production's down a bit as well. I think we dropped the production by somewhere around 1 million ounces, or maybe 1.5 million ounces. I'd have to go back and look at the numbers, but yeah, it's not from a production standpoint, definitely lower than what we originally guided back in January.
One thing that struck out to me is that you were timing your silver sales, looking for an improvement in prices later into the year. I guess when that was released not too long ago, we're looking for a recovery. So can you comment more on that?
Sure, I'd love to. It's I guess it's just in my blood. Trading is in my blood. I like to take advantage of markets when they get out of whack one way or the other. And in the case of silver, it definitely got oversold, and it broke down below $17 an ounce, and I just stopped selling silver. I didn't. I just felt it wasn't in the best interest of the business, and it was really 6 weeks or so before we resumed our sales again, because it took a while before silver to resume its normal price range, or at least normal in my view. And by making that move, I saved the company, several $1 million, and I'll do it again if I see fit. And our inventories got up to about 1.5 million ounces of silver by early May, and it wasn't until late June that I started liquidating some of those ounces. And now it made us look pretty good from a financial perspective. It big savings, and quite honestly, I really took pride in not feeding that cheap silver to the banks, who are infamous in taking advantage of this marketplace.
First Majestic has also made some news in the spring. I'd just like to go back. Can you tell us about the Springfield silver deal?
Yeah, look, I'm the founder of both companies, and First Mining Gold has a pretty incredible portfolio of gold development assets that I was able to accumulate, during the harder days of 2014 and 2015, when prices were dramatically lower. And I'm proud of putting that portfolio together. And one of the biggest, or the single biggest asset, is actually the Springfield Gold Project, which is likely one of the largest undeveloped gold mines in all of Canada, one of the top gold projects in all of the world. And they're anxiously permitting it, and it's a long process, of course. And their stock has underperformed, in my view, and rather than them going out and doing an equity financing and diluting their shares at a ridiculous share price, I thought it was a good opportunity for First Majestic to up its investment in that company. We're already a holder of shares in First Mining, but through that Springfield stream, not only do we get access to the silver, which is great for First Majestic, but also gives First Majestic a more of an equity position in First Mining, which I think is going to be great for the shareholders of First Majestic, and of course, much less dilutive and supportive for First Mining.
Can you take us up again where the location of that asset is?
Yeah, it's north of Red Lake. It's in the Northern Ontario region.
Okay. And then there was also Goldland Goliath.
Right. The Goldland project was one of the other assets that I was successful in acquiring. It was owned by a private company called Temaka. It never actually did reach the public markets, but they have north of 2 million ounces of gold there or thereabouts, and we've been drilling, or First Mining's been drilling on that for the last couple of years. But with such a large portfolio, and with Springfield being such a big project, we felt as a management team of First Mining that Goldland was getting somehow lost in the portfolio, and the company wasn't really getting the value. The neighboring property, or neighboring company, a company called Treasury Metals, has been dancing with First Mining for quite some time, a couple of years on trying to maybe consolidate that region. And it just made sense. It took a while to convince me personally, but I felt that the deal was good. We got a huge toehold in Treasury Metals, and so we get the upside. And also our shareholders will benefit as well, because we're actually planning, or First Mining is planning on dividending out a good chunk of those shares of Treasury to the shareholders of First Mining. So all of First Mining shareholders will get a piece of this new company, and with large gold holding and a future gold mine, as far as I'm concerned, in a great part of Ontario. So I think it's one of those classic win-win deals for both companies.
Keith, you've been in the industry for a while. You've been doing this for a while. Can you talk about this rise in precious metals? Is there anything different between what you've seen in the past, say, to 2008?
Well, it's still early days. I think that whether we're going to be in a 5-year bull market or 10-year bull market, I don't have a crystal ball, but we're still early on. I think that this bull market started in 2016, and we had a bit of a pause in 2017, 2018, and a resumption in 2019. And now it's definitely, we're touching close to new highs on gold, and silver's got a lot of catch up to do. Last time gold was trading at these prices, silver was $40 an ounce. So just to equal, where we were back in 2010, 2011, silver would have to double from current prices, which I think are going to happen. But I think gold is going a lot higher. I've thrown numbers out in the market before. 3,000 is an easy number to achieve, in my view. Whether it goes to 5,000, who knows? There's others out there that are talking much higher numbers. But I'm more focused on silver than gold. I look very much at the silver gold ratio, and I know there's a lot of people out there that think it's old way of measuring silver and it doesn't apply anymore. I disagree. I think it actually applies more than it ever has due to the industrial component of the metal, because in my opinion, supply demand fundamentals always prevail. Where markets go through imperfections. I've talked about this before, and the pricing imperfection in silver is quite extreme. Where you have, or we as an industry, the mining sector mines for every 1 ounce of gold, only 8 ounces of silver. And if you can explain to me why we're trading at 90 to 1 when we're only mining 8 to 1, love to hear your rationale for that. I've got my own views of why that's the case, but whether we see silver at 10 to 1 gold or 20 to 1 gold, I don't know where it's actually going ultimately. As I said, I don't have a crystal ball, but I think it's going to get a lot closer to 10 than to 100 over this coming bull market. And if gold goes to my minimum target of $3,000, then that puts a pretty hefty number on silver prices.
Keith Neumeyer, thank you very much for your time with Kitco.
Great. Well, great chatting again. Thank you.